I want to kick off by asking you to give me your thoughts on how the region's economy is going today, particularly in the UAE.
The economy has hit a soft patch following the collapse of crude prices, but things have been turning upward, especially the last few quarters. That has yet to be translated into a massive improvement in the sentiment in the region. The private sector across the region, frankly, is still, sentiment-wise, not feeling too positive. That said, there is a widespread feeling at the moment that 2019 will be a genuine inflection point. The major states in the region are hopefully beginning to spend, tender projects, and make payments on payables to contractors, vendors, and suppliers to governments. And that should help the sentiment. And hopefully that will translate into a more robust economic activity in the region.
And when you take a step back and look at the contribution of Saudi Arabia in particular, the biggest economy in the region, a lot of excitement surrounding this tie-up between Aramco and SABIC, the potential for this Aramco IPO. That obviously has a major impact on private sector enthusiasm. Do you think that that's coming back online as a direct result of what the Saudis are trying to do?
I think the actions being pursued in Saudi are helping. But if you speak to economic players in the private sector, they're looking for the cash, so to speak, if I wanted to put it in a crass way. They're looking forward to a day when the governments in the region are actually spending money and paying for projects, tenders, and other initiatives. And that is beginning to happen. The fact that Saudi Aramco is tying up with SABIC is a very good and positive development, at least from my and our perspective as an institution. But again, what is most needed at this stage is a stimulus of some sort and a catalyst for change in the sentiment. The sentiment has not been great of late, and I think that is, if I were sitting with policymakers, that's what I would suggest, is addressing what needs to be addressed to make sure that we have a shift in sentiment. That would be key.
And when you look at the geopolitical narrative at the moment, so many, frankly, hot spots and inflection points, as you say, in terms of the situation, not just within the region, but also the response that the United States, for example, has had to various conflicts here. And there is a big question on the minds of many investors as to whether or not the United States has become more of a destabilizing voice than it has been in the past. What are some of the risks on the horizon, do you think, from a regional perspective?
I think it would be too naive to assume that geopolitics has a less important role in what goes on in the region. It's also too naive to assume that the U.S. will be taking the most active role in shaping the agenda and forging the solutions for the region. The American policy under the current administration is one that I think can be described as more insular, more centered on U.S. interests.
America first.
America first. And that's understandable, whether we agree or disagree with it. The entire world has become reliant in a lot of ways on having America as the benevolent hegemon that led the free world, advocated and championed fairness, correctness in so many ways. I think under the current administration, that situation can no longer be a tenable proposition. And so the world, including this region in particular, will have to take matters into its own its collective hands, so to speak. And I think that's a natural progression for the region, as is the case in Europe and other places in the world that also have relied heavily in the past on the U.S. playing that particular role. The geopolitics in the region have been effectively a retarding force in some fashion when it comes to economics. But I don't think that the impact of it is long-lasting, nor do I see a massive ramp up in adverse events on the geopolitical front to cause us as economic players to be overly alarmed. That would be my assessment, Hadley.